And a market outlook. Calendar week, CW20. Calendar week 19 was not a classic schedule-driven week for digital assets, but rather a condensed event picture shaped by macro data, the interest rate environment, liquidity, and geopolitical headlines. The key focus was how the data fed into the path of the US dollar, yields, and risk assets. The market did show a slight upward move, but from a thin base. Follow-through volume, market breadth, and order book depth remained limited. The recovery looked more like stabilization in liquid core pairs than a broad release of risk appetite. On the macro side, the United States remained the main pace setter. Robust data keep the discounting channel tight because nominal and real yields remain elevated. Weaker data shift the focus more toward growth and liquidity. For digital assets, both channels were active. Interest rates defined the valuation anchor, while the dollar shaped the funding backdrop. At the same time, the Iran conflict remained an ongoing disruptive factor. Energy infrastructure, transport corridors, and the Strait of Hormuz influence oil prices, freight costs, and hedging costs. Higher energy and risk premia increase inflation pressure, stabilize restrictive rate expectations, and support the US dollar. Through real yields and funding costs, this creates pressure on rate-sensitive and risk-oriented segments. In the crypto market, this mechanism is reflected in narrower market breadth and stronger concentration in Bitcoin and Ethereum. The current situation can be summarized by two markers. Bitcoin dominance stands at 58.88% and shows capital concentration in the most liquid market segment. The Crypto Fear and Greed Index stands at 47 and describes neutral sentiment without broad risk release. This results in a BTC-led structure. Altcoins remain dependent on follow-through flow, order book depth, and derivatives positioning. The slight upward move changes little as long as it is not supported by broader market participation. Quantum data analytics did not develop any research signals in this environment. The reason is operational. The market regime remained event-driven, with fast impulses from macro data, rate communication, geopolitical headlines, and cross-asset moves. In such phases, the risk of regime misclassification increases because models can interpret short-term price movements as stable structure. An upward move on thin liquidity adds to this risk because signals may appear clean even though follow-through flow is missing. For that reason, filter adjustment, retraining, and the assessment of market absorption remained the priority. Without confirmed structure and reliable liquidity, no activation took place. For calendar week 20, attention turns to clearly identifiable event windows. The most important data point is the US Consumer Price Index. It directly affects rate expectations, real yields, and the US dollar. This is followed by the US Producer Price Index, which complements the inflation picture at the corporate level. Together, these data shape the short-term rate path and therefore the valuation anchor for risk assets and digital assets. Later in the week, US retail sales and initial jobless claims move into focus. Consumption data show the demand component of the US economy. Labor market data show income and employment. Both data fields run through the same transmission channel. Growth and inflation influence rate expectations. Rate expectations move the dollar and real yields, and from there, pressure or relief emerges for Bitcoin, Ethereum, and broader crypto segments. Crypto-specific factors remain relevant as well. Token unlocks, ETF flows, and derivatives data. Unlocks locally increase tradable supply and meet volatility where order books are thin. ETF flows act through the spot demand channel. Funding rates and open interest show one-sided positioning and liquidation risks. In a thin upward environment, limited flow impulses can amplify or reverse moves. Operationally, the sensitive time windows are clearly identifiable. Elevated slippage arises around US inflation data, producer prices, retail sales, and labor market data, as well as during the US Open after strong data impulses. Additional volatility emerges when macro data and geopolitical headlines affect the same pricing channel at the same time. In these phases, execution quality ranks above signal speed. Structural risk remains in illiquid altcoins, tokens affected by unlocks, and leveraged perpetual markets. This report does not constitute investment advice, contains no buy or sell recommendation, and serves exclusively informational and research purposes. Quantum data analytics, analytical, strategic, innovative,